morning, everyone. You join us in our kitchen, just making a coffee to get the day going. I've already showered and been up for a little while, since sort of 5 a.m. But I'm not one of them that's just going to set their phone up, get back into bed, film themselves getting out of bed, all of that absolute nonsense. So come and join me for the morning coffee. I'll always have one of these on our Nespresso machine, and we will then just get onto the charts, because it is US election tomorrow. So big week ahead. Obviously the biggest news event there ever possibly is in the sort of economic calendar. But as I've said to my traders, as I'll go on to in a minute, it's strictly pretty much a no trading week this week, because it's going to be so volatile, so choppy, and just protect your capital. So I'll catch you on the laptop in a minute. So when I'm having the morning coffee, I will always then just sort of go through the charts. I already know what I'm looking for because I'm already planned ahead. Those of you in the community will know that I drop a huge weekend video every weekend from analysis from the week before, sort of breaking down and journaling trades that we've had, the wins, the losses, and then also the majority of the video will be about the week ahead, what we're looking for, and so on and so on. So I'll always just be checking the charts in the morning, but it's more just to see those few optimal setups, or pending optimal setups, should I say, just seeing, are we nearing an area of interest, and so on and so on. So as I mentioned earlier, obviously it's the US election tomorrow. It is the biggest event there is, and obviously the US dollar being the world reserve currency, I've just told everyone in the community basically to have the week off. If there was ever a week not to trade, it is this week, because it is going to have a massive ripple effect across all markets. And so although the technicals may still look a certain way and still may look clean, who's to say with all the volatility and choppiness that's not going to, it's going to throw things. And even if something's technically looking sound, it can still massively throw things out. It can wick you out before then going up in your intended direction. So I've said to people this week, this is the perfect week to practice your patience, to practice your discipline, to practice sitting on your hands. It's a skill that every trader needs anyway, and this is just an easy opportunity to force your hand this week in general, and even maybe in the next couple of weeks, to sit back, watch, analyze, reflect. This next week or two can make you a much better trader in terms of just observing and looking. It's a skill not a lot of people have, if I'm being honest. It's a skill a lot of people who come on board with me initially really struggle with, and obviously we improve them when we get them out of it. But I find it's a common trait that struggling traders come to me with, and like I said, this week it's a perfect example to practice that. I try and train my legs twice a week. And I try and make sure one of those leg sessions falls on a Monday, just because obviously leg sessions are the hardest, both physically and mentally, to push yourself through. So in an ideal world, I try and do that at the start of the week, just so it sets my mindset up right for the week, that mindset of 100% discipline, consistency, determination, all that stuff that, when you're training legs, at times where you want to quit, you don't, and obviously you pull through. So we're off to do a leg day. Come and see how grim it can look at times. So guys, leg session done. I find now I've swapped in a hack squat instead of a barbell squat. It's just better on my lower back. I find I can get better depth on the hack squat. I can train a lot closer to failure as well on the hack squat. So I found since doing that, my legs have responded really, really well. Don't get me wrong, barbell back squats are insane for leg growth. I am not questioning that. But yeah, hack squats just seem and suit me so much better. The plan when we get back from the gym is just to see what the most recent 4-hour closes have been like in terms of structure and price, just to see what's going on. Like I said, I'm not really looking to take anything this week, but obviously still good to, again, it's my normal routine, so I want to be as transparent as possible. We'll then go and take the dog for a walk, and we'll go and grab some coffee as well to set ourselves up for lunch and this afternoon's work. So, as many of you will be aware if you follow me on Instagram, last week was my first losing week I've had in 7 weeks. October was a fantastic month for me. I finished 14.9% up for the month. Now, as I stressed on Instagram at the time last week, I basically said that is not realistic. You should not be trying to attain 14.9% a month. It will lead to over trading, over leveraging, bad habits that will ultimately end up with a load of losses. I'm 10 years in. These sorts of months do happen and they are completely possible. But if you're in your first 1, 2, 3, 4, 5 years, it is rare you're going to see these types of months regularly, but they are possible. So what I wanted to do is go through 2 of the losing trades I had last week. I finished the week minus 2.5% overall. And so I'm going to go through those 2 losing trades now so you know what a good loser looks like, because both of these trades I would take again, and that's the type of losing trades that you want to have, okay? Because losing is going to happen whether you're 1 year in or 20 years in, part of the game. So as you can see here, first position was a long on CAD yen. Both these 2 losing positions were CAD yen. There's another on silver, but I'll cover the CAD yen ones. You can see here, we were, just for people's context, we were bullish overall on all higher time frames, monthly, weekly, and daily, and obviously the 4-hour, as you can see here. Now, it was the Japan election the weekend prior to this trading week, and you can see there was a big gap in here, which did get filled in the end, just about, but we were still bullish overall on all higher time frames. JPY basket was bearish still as well. So again, from a higher time frame perspective, macro perspective as well, things looked good, and we were simply looking for longs on those higher lows that were formed here. And initially we had a really good push, and I wasn't far off bringing my stops to break even, but it hadn't quite just reached where I was going to pull the stops to break even, basically making it risk free. We ended up coming down, nearly tapping me out, and then we ended up pushing back into profit again. And I thought, brilliant, this is now going to be that second push, and hopefully onto targets, which were initially 3%. Then, as you can see, we dumped and stops got taken out. Now, that's fine because that stop loss gave it room to breathe. But in the end, you can see down here, the 4-hour did break structure of this prior higher low here. So, and it did break, it made technically a lower low on the 4 hours. So if I just delete that now, so once this had happened, normally I would then have closed myself out prematurely. But because we then had this 4-hour push higher again, I was just sitting on my hands thinking it's well worth it still, because higher time frames were still all in sync. Now, in the end, obviously, we got stopped out, and it stopped us out. As you can see, things ended up dumping and melting even more. So the stop loss was placed in the end in a really good place. It wasn't placed in a good place on the second trade, which I'll come on to in a second. So obviously then, being adaptive, as you have to be in the markets, instead of marrying that bias of looking for long still, we then saw a shift of the JPY basket to turn bullish, which then meant obviously things like CAD yen typically will turn bearish, as long as the technicals on CAD yen and the JPY basket are in sync, which they were at the time of this trade. So we were looking at just getting in off this leg here. We were looking for the pullback, and again, we were looking to take shorts off the lower high formed. Now, again, the entry was really, really good in the end, and we came into a little bit, let me just get rid of this short position target. Ended up getting in here, it was off a 1 hour in the end, but we had a really nice push down into profit initially, thinking brilliant, minimal drawdown, and yeah, brilliant. Then, if I just undo that short position, you can see I got stopped out literally to the T. And what I should have done in hindsight is just had that stop slightly higher to cover that previous wicking. But I didn't and got stopped out to a T. And then obviously look what's happened. We've ended up dropping, sort of 45 pips so far from the initial targets where I entered. So it's a shame, but it is what it is. Got stopped out to a T. Now, if this wasn't election week, I'd probably be looking for scale-ins now on this short because it's all still completely technically valid. But because it's election week, I'm going to stay well clear and sit on my hands. So it just goes to show, guys, you are going to have losses still. And even that annoying, silly mistake I've made there on the stop loss, just not giving it enough, another 5-10 pips would have just been enough to keep it in play. As you can see, that 4-hour candle that stopped me out with that wick ended up closing a lot lower from where it stopped me out. So it's frustrating. It's part of the game. This is why you keep ultra strict risk management. So when these things do happen, it's okay. And they barely dent your capital, okay? And again, it just goes to show, I had a losing week last week, but I still finished 14.9% up, okay? So it's all about getting those probabilities in your favor, nailing your risk to reward, nailing your risk management, and staying super disciplined, because you're not gonna get every trade right every single day, every single week, every single quarter. It's impossible. I miss you, babe.